The moving average crossover strategy is an overrated strategy because it doesn't work all the time. Now, the conventional way of trading moving average crossover would be as soon as you see the moving averages crossover like this, you will wait for a pullback as it retests the moving averages. Just get in on the sell just like that with your stop loss right here and then taking the trade all the way down like this. And there you go, as simple as that. Now, we all know that's not exactly true because in a lot of cases, you will see situations like this where there is a crossover happening right there. And if you were to take a sell on a retest, this trade would immediately stop you out. Now, if we move on a little bit further, we have another crossover that happened right here. This crossover, if you were to take a retest sell on this trade, simply like this, taking it down to the lows like that, again, this would reverse on you. Now, how many times have you been in a situation like this though? As soon as the crossover happened, another crossover tend to happen again. And this time, let's say if you were to take a buy, following the conventional rule, right around here, this trade would one more time stop you out. So here's the thing. The crossover strategy works sometimes, but doesn't work on other times. In this video, I'm going to talk about what exactly do you need to look for to make sure that your crossover trading strategy would actually work. Alright, so the first thing you want to do when it comes to crossover trading strategy would be to scroll down, hit the like button if you haven't already, subscribe to this channel, and leave a comment below on how you're enjoying this video so far. Okay, in all seriousness, let's get started. To figure out the solution on how to trade the crossover strategy successfully, we first sort of need to understand what does the moving averages actually mean. So right here I have the 20 EMA, the one marked in yellow, and the red one marked there is the 50 EMA. Basically, if we're talking about a 20 EMA, it just means it's taking the average of the last 20 candles and see where price is heading. So in this case, let's say we are marking this spot right here. That at that particular point, it's taking the past 20 candles and seeing where price is going. And the fact that price is above the moving averages just means that we are in an uptrend. Now, the same thing would happen for the red moving averages, the 50 EMA. The 50 EMA is taking a little bit more data, considering a lot more data than the 20 EMA. In this case, 30 more candlesticks just to see where price is exactly over the last 50 candles. So when we have a crossover that's happening, for example, something like this right here, it's telling us that the short-term trend has turned around. So in this case, when you see both moving averages crossing over like that, moving towards the downside, it just means that in the short term, things are going down. Now, if you really pay attention to what I'm talking about short term, because 50 EMA and the 20 EMA is just taking a very little amount of data to consider what the trend is doing. So we can see that short term things are moving down, and based on that we do see some selling pressure right here, as well as here, because a lot of traders, they are also looking at this thinking that in the short term we are going down for the sell side. Now, same thing will happen here. As price hits up, we see the crossover happening again. Both the moving averages is telling us, okay, based on everything that has happened so far, we are heading up. That still doesn't answer the main question. How do we know when should we trust a crossover? The key word here is understanding the trend. For this, you want to use the 150 EMA. Now, if I pull up the 150 EMA, it looks like this, okay? It's this one right here, the purple moving averages. What you want to do is just scroll out a little bit just to see where exactly is the purple EMA moving. In this case, if we really look at where the moving averages start, right here, and where it ends, right here, we're pretty much going in a straight line across the screen. And remember what the 150 moving average is telling us. It's telling us the bigger trend because it's considering a lot more data. And if that's the case, knowing that the 150 EMA is moving sideways, it's telling us there's no trend involved. And if there's no trend involved, no crossover pattern is going to work, because the whole crossover pattern strategy relies on a trend reversing. But if there's no bigger trend to begin with supporting the crossover, things are going to fail. The easiest way to trade crossover patterns will look something like this. First thing you want to do is identify a strong trending market. Okay, I'm not going to use the moving averages here. I want to make sure you understand the logic. Once you have identified a strong trending market like this, okay, moving towards the upside, the next thing you want to do is look for a pullback and look for a buy. This is by far the easiest strategy that I have seen on the internet for decades. And if I were to plot out where the moving averages are, the bigger moving average will look something like this. Okay, because it's taking a lot more data, so it's further away from the price. Now, if we look at the 50 EMA, it's gonna look something like this. It's gonna look closer to the price, okay? And then if we take the 20 EMA, it's gonna look a lot closer, right? It's gonna stick to the price a lot like that and like this. And what this essentially means is, in the very short term, at this conjunction right around here, there is a short-term change of trend. At this area right here, that's where most traders get caught because they are thinking a crossover has happened and it's time to sell, right? Whereas this crossover actually performed. Ever wondered why? Remember what I was talking about earlier. When the moving average crossover, it indicates a short-term change of trend. At this area right here, this first area, it's telling us in the short term, things are going down, okay? And in this area, in the short term, things are going up. However, we know that this area could go up a lot further. And why is that the case? Because in this case, we have backing from the bigger trend. If you're following a trend, always make sure that when you're trading a crossover, it's going in line with a bigger trend. That's the most important rule when it comes to trading crossover strategy. Now that you really have understand this logic, let's have a look at some examples where we can really understand when does the crossover perform, when does it not perform, and when do you actually trust it and the whole application of it. So for this, let's have a look at Euro USD on the 1 hour time frame. Now on the 1 hour time frame, what we can really see here is we have a crossover happening right here. And if you only take that into account, you're going to be thinking of selling. However, you do not want to be selling because if I zoom out just slightly, we can see where the purple moving averages is. It started at the bottom and now it's all the way up there, which tells you overall we are in an uptrend. If that's the case, if that's what the purple moving averages is telling us, you do not want to be selling. This crossover pattern here is likely going to trap a lot of people selling on the wrong side. Now, traps like this is just one part of a bigger picture. Most traders, once they have learned what traps is and how to use the moving average crossover to get in on their entry, they just stop there. But if you really want to learn how all the pieces connect, how the traps actually work in detail, how to get in prior to the trap happening, reading structure, manage entries, and building true consistency in your trading, I've got something really special coming right up. On October 29th, I'll be hosting a free live webinar session which I will walk you through the complete blueprint of how a professional actually trades on a daily basis, step by step. And during that session, I'll be revealing something that I've been building very quietly for months. A full training program designed to help you master the market with total clarity. Just make sure to sign up for the next webinar that's coming up on November 29th because that's not just any webinar. That's an event you don't want to miss. Look at what happened next. We pull back into the moving average, we try to go lower, and then things turn around like that, okay? All because the higher time frame is still supporting a buy, and you know that based on the 150 moving average. So knowing that we don't want to be selling, this is the perfect opportunity to wait for the second crossover because we know the first crossover is likely going to trap traders selling on the wrong side. However, if we have a crossover moving in the opposite direction, in the direction of the bigger trend, that's now a crossover you can trust. So see what happens next. We have a move up and the moving average started to cross over the second time. This second crossover is indicating that the smaller trend is going to the upper side, which is also in line with the bigger trend indicated by the 150 moving average. So what you would want to do is simply look for a buy right there and then taking this trade to your next target. In this case, let's say we go for a 2R trade like this. So let's see what happens next. Right now we got failed on our buy, price is still going sideways here, but you really see that the short-term uptrend is still supporting the buys and we're not really going down any further anymore, right? We see some kind of volatility coming in here and boom, we reach target, just like that. Very, very simple, and you do not need to overcomplicate things. Now let's have a look at another example that I want to show you now, this time on the Bitcoin chart. I'm looking at it on the 50-minute time frame and we just had our first little crossover, and the crossover is happening right here. Now again, based on conventional knowledge, when you see a crossover, you want to take the retest and look for the sell. In this case, we do not want to be selling because based on what the 150 moving average is telling us, we are in a strong uptrend. We can clearly see where the 150 moving average started from and where it's at right now, and we are going up. And if we are going up, that means you don't want to take a sell based on this crossover pattern right there. Instead, what you want to be doing is wait for the short-term downtrend to turn around. We're still going sideways, nothing really has happened yet. I need to zoom in here to show you exactly when does the crossover happen to the upper side. We need the yellow moving average to go up. Okay, there we go. Price has officially went towards the upper side. The crossover has happened the second time. Again, the first crossover is telling us to not sell because that's where traders are going to get trapped and be on the wrong foot. You don't want to be that kind of trader. What you want to do here is stay on the safe side, waiting for the second crossover to happen, which is supported by the bigger moving average going in a bullish direction. So again, what's going to happen here is we're going to put in our buys, stops below, and then in this case, let's do the same thing, go for a 2R trade. Let's see how this will play out. We have an initial push very quickly towards the upper side. You see price stalling sideways a little bit and boom, there we go, reaching target. Very, very simple, right? Again, you don't need to complicate things. Just exiting at the recent high would generally give you a very, very good risk to reward. All right, so let's have a look at dollar Swiss on the 1 hour time frame. Now, this is not just any example. This example shows very, very clearly how well this strategy can perform if used the right way. So first things first, we know that the first crossover is a crossover that we do not want to trust because in this case, looking at the 150 moving average, we are trending towards the downside, which means you do not want to be looking for a buy. What you want to do is wait for the second crossover to happen. Once the second crossover happens, start getting ready for the sell side. So if you really play this forward, we see that the buys actually did not perform. And then we have a crash towards the downside. I'm still waiting for the crossover to happen, and it happened right here. Okay, so now that you have seen the second crossover happening, that's telling us that the short-term trend is also changing into the direction of the bigger trend. We have found alignment, and once you have found that alignment with your bigger trend, that's where you want to start getting interested. What I would generally do in cases like this would actually be looking for a pullback into this support equals resistance area right around here. Now, if you haven't checked out my SNR video, check it out right here to understand exactly why I would get in there. But what you can do is just see if price is going to find rejection at this area or simply using a limit order to get fill as price comes up. It's all up to you. What I'm trying to tell you is anything after the second crossover right there, it's a much safer spot to get in. So let's do this. We'll get in right around area like this as price comes up for a retest, and let's see what's going to happen. If I play this forward, we can see we stall sideways a little bit. Haven't really gone up yet. We got a fill right there. Price is still going sideways, and we are approaching market open London session, and things are slowly grinding a little bit lower, and boom, take profit. And see how far this trade actually still continues to go. The whole point here is not to catch all the big trades, right? The whole point here is to be able to understand when exactly does the crossover pattern work And can you do that repeatedly? That's where true money is made. So there you have it. The moving average crossover strategy does work, provided that you are aware of the bigger trend. And hopefully this video proves that point. I hope you enjoyed this video. If you haven't already, make sure to like, make sure to subscribe, make sure to turn on the notification bell, and I'll see you on the next one. Cheers, bye for now.